Hi, this is Jack Ma with Century 21 Masters. I'm a local real estate agent servicing San Gabriel Valley and North Orange County. I want to talk to you about what we're seeing in the real estate market today. It's been 2 years since the interest rate hike, and interest rate remains a hot topic in real estate. If you've been following closely, you'll know that interest rates started climbing in April again. At three different points in time, mortgage rate actually hit 7.5%, the highest since December of 23. As a result, the spring season hasn't been as robust as usual, with high interest rate pending sales are sluggish, resemble those of April 23. The uncertainty surrounding interest rate and the global landscape has caused many investors to sit on their cash, waiting for opportunities in the stock market, 10-year bond, or mortgage-backed security, just in case long-term economic issue arises. But why did interest rate rise despite Fed discussing 3 rate cuts last year? Well, the answer lies in the data. The Fed has emphasized that its decision will heavily be data-driven. So investors scrutinize those data too closely. And what happened in April? The 3 peak in interest rate coincide with 3 data releases. Consumer Price Index for March was higher than expected. Retail sales in March surpassed the Fed's expectation, and GDP growth came in lower at 1.6%, rising concern about stagflation. And Wall Street panicked. Speculation arose that there might not be 3 cuts. Some even suggest that possibility of another rate hike by the Fed. Then came May, and things looked quite differently. U.S. job opening dropped to 8.5 million, the lowest since 2021. Only 175 jobs were created, lower than expected, drove unemployment to 3.9%. And just this week, the consumer index came in as expected. Retail sales remained flat and actually underperformed expectation. Those trends are what the Fed likes to see. Moreover, during the last Fed meeting, they were a little bit dovish, saying that there's no stagnation and they're still looking to cut rate this year. So as a result, interest rate dropped to 6.99% as of May 16th. And this is significant for buyers. If a buyer wants to pay 20% down payment and keep their mortgage at $3,000 a month, at 7.5%, they could afford a house at $540,000. At 7, it's $567,000, a 5% increase in their purchase power. So if this trend continues, we'll likely see demand continue to rise, followed by increase in supplies. But demand should still outpace supply. So for buyers, now's the time to take advantage of a dropping interest rate and increased purchase power. It gives you more leverage during bidding war and opens up more options at a higher price point. And for sellers, with demand increasing and supply lagging, the market will shift even more in your favor, allowing for better negotiation on terms and price. So that's it today. If you have any question, reach out. If you want to discuss your real estate buying or selling plan to see if it's a good time for you to take advantage, let me know. My number is 909-610-5188, and I'll talk to you soon. Bye-bye.